Hello and welcome dear traders and investors. I'm glad to present to you the daily market review prepared by analysts and experts from fx.co portal. Here we go. Today is October 12th and we're starting from euro-dollar pair with Jakub Novak. CPI data for Germany led to further euro growth, but a much larger surge in volatility occurred after the publication of the minutes of the September FOMC meeting. Although it essentially did not provide a clear explanation. Everyone waited for the contents, and only after that did they consider what to do next. Today, inflation data in the US will come out, but before that, there will be a speech from ECB board member Frank Alderson, as well as the ECB monetary policy meeting minutes. For long positions, buy euro when the quote hits 1.0649 and take profit at the price of 1.0691. Growth will occur after a weak inflation report. However, when buying, make sure that the MACD line is above zero or is starting to rise from it. Euro can also be bought after two consecutive price tests of 1.0627. But the MACD line should be in an oversold area, as only by that will the market reverse to 1.0649 and 1.0691. For short positions, sell euro when the quote hits 1.0627 and take profit at the price of 1.0588. Pressure will return after an unsuccessful attempt to stay at weekly highs, as the pair's bullish potential diminishes. However, when selling, the MACD line should be below zero, or is starting to drop down from it. Euro can also be sold after two consecutive price tests of 1.0649. But the MACD line should be in an overbought area this time, as only by that will the market reverse to 1.0627 and 1.0588. We've got a notes for GBPUSD, pound sterling dollar pair. Sebastian Seliger describes. The GBPUSD pair has been seen continuing the pullback above the last swing high, located at the level of 1.2270, and made a new swing high at the level of 1.2303. Only a strong and sustained breakout above this level would change the current situation to more bullish, but for now, all the bullish attempts to extend the up move are in vain. The intraday technical support is seen at the price of 1.2260, and the intraday technical resistance is seen at 1.2303. Please notice that despite the possible pullback, the midterm outlook remains bearish due to the bearish cross of 50 and 100 DMA on the daily timeframe chart. Gold, sweet gold. We've got a trading plan for this commodity asset presented by Dimitrios Tsapos. Early in the European session, gold is trading around 1878, below the 200 EMA and above the 21 SMA. On the H4 chart, we can see that gold is trading within the bullish trend channel formed at the beginning of the week, and is approaching a strong resistance zone around 1887. In the next few hours during the American session, US inflation data will be published. The CPI is expected to remain at 3.6%, 1 point down from the last month. If the inflation data is above market expectations, it could favor the US dollar, and it could put strong downward pressure on gold. On the contrary, the reading equal or lower could give a strong bullish impulse to gold, and it could reach the 200 EMA at 1886, and even reach the 61% Fibonacci around 1894. If we trace the Fibonacci retracement from the high of 1947 to the low of 1812, the 61.8% is located at 1894. Gold could reach this level in the coming days, and from that point, it could resume its bearish cycle until it covers the gap it left at 1831. The Eagle indicator is given an extremely overbought signal. In the next few hours, a technical correction will occur towards 1858, 21 SMA. Our trading plan for the next few hours is to sell gold in case a pullback occurs towards 1887, or at the current levels around 1877. The key will be to wait for the publication of the US inflation data to make the right decision whether to buy or sell. And finally, here's Laurie Bailey with AUDUSD pair forecast. Let's have a look. AUDUSD traded above the level of 0.6388 on the daily chart. It started with the price test of the support level, followed by a new upward wave. The nearest resistance lies at the MACD line, 0.6470, while the signal line of the Marlin oscillator moves into the area of an upward trend. Breaking through the 0.6470 will likely lead to growth towards 0.6514. On the 4-hour chart, the pair is steadily rises within a local price channel, and testing the upper boundary could occur around the level of 0.6514, with the pair currently trading above both indicator lines. The balance indicator line, its red line on graphic, and the MACD line. The Marlin oscillator approaches zero. Further growth may be seen today. That's all for today. See you online soon and good luck.